Patron, take them away.
Okay guys, I'm just gonna build a chart up for you to kind of show you set and forget. Now what I'm doing is this. Let me just pull this down a second. So if I pull this down, we'll see that the strongest, weakest, etc. is the US query, right? US Kiwi. Simple. Pulls apart, gained a lot of strength, lost strength. Right. So we know there's movement. Genuine movement here. Right. So I'll get rid of this for now. Build a chart up. All the indicators off it. Now this might actually help Malcolm as well, but I'm mainly doing this for Michael. So take the indicators off, out to the monthly, get all the drawings out of historical data so we can see what we're doing. Key levels, right. Need these key levels, always need your key levels. Right. Base that we can see, top that we can see. Very, very simple. Up, down. So the next level is probably the base of that. Now I'm only really interested in and around the price without doing a full markup. So that's all we need. Price is heavily trapped. Vertical. Take this back over here. Fine. There's nothing for that, and that I'm just going to leave where it is. So what have we got in and around this area? Well, the next one is probably the very tips of that, but it's very tight. Okay. Nothing else, so we're still trapped in this area. Okay. Daily. Just move that up. Pull that down into there. And there's still nothing. Now we've got a huge gap here. It's not really a big gap at all. So we've got a void. It's a big void. Breaks through. It's probably to there. All right. So do this. Get rid of that. All right. Okay. Interesting chart. So in the monthly, what have we got? Well, we can see the price is contained here. It's pushing down heavily against that move there, but all of this is contained inside of that. Okay. Now we've also, just if we're looking at recent history, if we drop an extension on this one, it's already been to a turning point. So that is probably what we're interested in. So I'm going to get my fib. Accelerant started around there, got down as low as here. There's the 23 and it's rejecting the 50. Okay, if that's the case, then there's a high probability that this could push down. All right, but that's monthly. Got to remember that, that's monthly. Why? Because it'll work to 50%, reject, and then work back to where it's come from. Well, there's your rejection. It's gone through the 38. So if it's going through the 38, where's its next point of attraction? Well, it's down here on the 23. Simple. Right, get rid of this. Down to there. It's the weekly done. Well, the price is now contained inside this drive. Simple stuff. Hold of that. Tracement back to the top. Sure enough, key levels are being respected. So we're just going to drop these in. And there we go. Right, so they're in play. Simple. Took that up as high as there. Get it onto a daily. See what the daily's up to. Well, slam down, slam up. Kind of holding in play. This one we don't know if it's finished, so it could easily push down to this. It's rejected that, but that, it's kind of here. This one. Right, so I'm going to drop that in because I can see the accelerant started up there. It's got down as low as there, and it's touching the bottoms now, and that's balancing out. Right, okay. So, fully mapped. See exactly what we're up to. We just need to drop a couple of levels in. Right, so that's fine. We're happy with this. How far can this move push if it's breaking? Well, just a second. So it's there, to there, here. Right, so there's your danger zone, down here. So what have we got? Right, let's take a little bit of criteria as to try and understand what the market's trying to achieve. Well, we can see, let's go out to the monthly, look at the big picture. Put MACD on. Change that somewhat. 8.21.5. Well, that's kind of up. You can see that from there, but there is a rejection, but it is up. Weekly, sort of indecision, but slightly to the downside. And daily, definitely to the downside. So with this, I will be conservative. I'll be really conservative. Right, let's see if we can set up something for today. All right, so we've got signs of a push down. It is collapsing in, telling me the pressure's running out here, and that is pushing up. And if I put on an extra line on this, just down to 10, you can see it's been absolutely extreme to buggery. So the chances are that'll hold if that's as far as it's going to go, with a retracement to push back up. Okay, 1 hour. This is about as far as I'm going to go. That's pushing up as well. Why would that be? Well, it's closing in. It's coming off here, and we've got this lovely drive. Okay. Well, let's have a look at the DNA of this move. Now, the accelerant we can clearly see is here, which was this event. Now, if we just look at that single candle, pull this down. Well, there's your stall. Stalled again. And that leads bang onto that. So this single candle is showing the DNA of this move. Okay. All right. And what it's telling me is there's a key turning point here. And we can look at this. And it is meandering down one thing and another, but it is losing ground. So if I'm doing a set and forget, I'm really in and around this area. So where would it go from here? Well, if it's pushing back up, it's here. You know, how far is that? Well, let's have a little look. So from there, like 20 pip move. If it's coming back on itself to the fibs, that's 57. For how much pain? Well, about 1 to 1. So what I'm going to do is I'm going to sandwich this. All right. Now I have to put a line in the sand and assume what's going on. I'm going to draw in a golden eye. Just here. And I want to see where the actual eye is. I'm not really bothered about the red stations because I'm going to stage into this. There's the 61. Here. Bingo. Marries up again. Right. So we're going to stage down into this to move back up based on what I can see. But that also comes from the bollies, one thing and another. Ideally, I want it down here. You can see a little bit of pressure, but that's closing in on itself. So let's map this out on a 15-minute. That's pushing down somewhat. All right. We'll start it above this candle here. There. And we're going to follow price down. I'll just put it on my phone and we'll see. Simple stuff. Anyway, hope that helps. Morning guys, hope you're well. Just getting ready to speak on the meeting with you lot and checking the set and forget. It's been running for a day or so. This is the beauty of set and forget. You set it, you lay it up, you let it get on with it. So let's have a look, see where we're at. There we go. You see me build this up. It's come down, it's triggered 1, 2, 3, 4 of the orders, but now it's got a nice little profit sitting in it. And we're going to let it run up into maybe around this area. I'll monitor again at dinner time, but yeah, it's pretty good. So that's running fine. So the dark area, the way we want to look to get out, bottom of the swings, all that sort of thing. Not a bad trade. So catch you in a bit. Okay guys, let's have a little look at this and see what the amendments are. As we saw earlier, it was doing quite well and the premise is flying. What we're going to do now is we're going to pull in the stops into a nice area. So get my stops, there they are in the black zone. Just a few candles back. Just pull this all the way up. So we can see. Now these are relatively tight, but it is Friday afternoon. And also the money is in play. So what does that mean? It means we've got a good lot banked and it's now all locked in. So whatever we get now is fantastic. Now the targets are slightly changed. I've staggered them. I'm going to leave them to cash out as and when. If it all cashes out now, it don't matter. But if I put this onto an hourly, where are we looking at? Kind of get rid of this. So you know what that is. That one's going to cash out here first. And the reason why that one goes out first is because if it comes back, it's kind of not really going to give us anything. So that runs up, cashes us out. Then the next one, the next one, and then finally the next one. We're just going to run it all the way up here, see if it'll go. That's the general gist. So what's the moral of the story with all of this? Well, it's about letting the chart do the work, essentially. The whole thing was mapped out. I put some key levels in, got an understanding of what I wanted, took an idea of what direction is, and then just let it play out. I wasn't trying to be clever to try and catch every move in the market. I was looking for the bigger picture, and that bigger picture is what pays us. Now that is basically how I pay for my car. It's how this house got paid for, that sort of thing. It's all well and good being in the markets all the time. It's exciting, and we touched on this in a meeting today. You don't want to be a slave to the machine. And I know you're going to have people just rolling their eyes and sort of just looking into spacing and just get in the market, you'll be fine. It's not fine. Roll your eyes and look into space and things like that. You're wasting your time. You know, you've got to plan these things out, which means you need to know how much it's going to cost you on the point of entry. If you're happy with that cost, you're at peace with the market. You've got to know where the key turning points are, so probability of price pushing to it. Then you've got to target appropriately. And then finally, step away. That's, to me, is a good way to trade. It's a very peaceful way to trade. I've done loads this week and I've still been paid. So tell me in the comments, am I wrong? You know, if you think I am, fine. You know, do what works for you. But something else we picked up on in the call as well, which I thought was really interesting, was about opinions. Because you should have total conviction in your trade. You can have two traders look at the same chart at the same time, one long, one short, both right. The difference is one of them has to wait. In other words, wait for their setup. Whereas if they both entered at the same time, well, obviously one will be wrong. But on the day, they can both be right. So don't be swayed by opinions. If you've got conviction and you trust what you're looking at, stick with it. And then discuss it. Simple as that. So there we go, boys and girls. Hope all was good. Have yourselves a great bank holiday weekend. I'll be back at it on Tuesday. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.